Hello, this is Jonathan Rosen, Certified Public Accountant and Managing Partner of SKG Tax. This video is for presentation purposes only, should not be construed as tax or legal advice. Complimentary consultations are available through our channel's description. We are not a law firm. So some of my favorite clientele to work with are new business owners. They are excited entrepreneurs. They have an idea, they have some money that they want to invest and go into business for themselves, but they often ask me about the tax aspects of the decision and exactly how they should organize their firm. This is where it's great to work with me and collaborate potentially with an attorney depending on the size and scope of your investment and the number of partners, etc. But really a simple framework for starting any entity is to file articles of organization for an LLC. You may want some guidance from a CPA on what state you're forming the entity in, as that can have implications, but generally it's really whatever state your business is going to be operating in. At that point, you may want to draft an operating agreement, even if you are a sole proprietor, but it's much more likely you'll draft an operating agreement as a partnership. That could also mean filing articles of organization if you're talking about a substantial investment and an extensive business operation. Next, you'll just want to obtain an EIN number from the IRS and a state employer ID number as well. Some states have those. The next thing you would talk about with your CPA and attorney is how you want to be taxed. The default election for a partnership is to just be taxed as a partnership, so it's a straight up flow through entity. All the money the company makes will flow through to the shareholders' personal tax returns. Likely it will all be self-employment income. If you are a sole proprietor, there's really no need to file an entity return, so your LLC would just have its income reported on your Schedule C on your Form 1040. You could also elect to be taxed as a small business corporation, which involves filing an entity return. Also likely involves taking a salary from the business once you become profitable enough to do so. That's actually a requirement. And same thing with a C Corp. You would file a C Corp return. It is not a pass-through entity. Income does not flow through from the entity to the shareholder's personal return. In some ways, this can be favorable. In some ways, it can be unfavorable because of double taxation. I'll touch on all those topics specifically and separately in their own videos as they are worthy of further examination. The fifth step you would take is just to capitalize your business bank account once it's open. You filed your articles of organization, you got an EIN number, you go to the bank, you tell them what you're going to do, open up a business bank account using the business tax ID. If you already have substantial capital and you have good credit, you can look at a business credit card. This is not just good because you get rewards and can transact online easily, but it is also a good theft prevention mechanism. Banks will typically protect their own money when it comes to credit card fraud, but are less apt to help you if your business bank account is compromised through subversive transfers. Just for example, if someone gets a hold of your bank account and routing number and accesses your funds. The next important thing that you want to do is set up your framework for maintaining books and records. So get connected to QBO or some other accounting software that makes sense for your industry. Could be Xero, could be Sage. Different softwares are better served for different industries. For most basic services or consulting businesses, QBO is really just fine. And depending on the tax status you elected or what you're looking to do, you may want to set up payroll. So that's really the basic framework for getting your organization formed, getting it off the ground, and getting it operating able to receive revenue, and able to pay expenses, keep your books and records organized, and make the right decision of how you want to be taxed. That's really all for now. We will dig into these topics separately in another video. Jonathan Rosen, Certified Public Accountant, Managing Partner, SKG Tax. Thank you for your time. Bye-bye.